Oke. Standby. 5, 4, 3, 2, 1, bumper.
Hello, distinguished guests, ladies and gentlemen. Welcome to today's webinar on leveraging capital for inclusive growth and sustainable recovery through SDG Bonds. My name is Amelia Navia, and I'm so incredibly honored to be here to be part of today's event. And on behalf of our year's organizers, we'd like to extend our profound gratitude and sincere thanks to everyone for your participation and for your attendance here today. So this event is presented by the UN Joint Program Accelerating SDGs Investment in Indonesia, or ASSIST Joint Program. It is a joint program between UNICEF, UNDP, UNIDO, and UNDP as the technical lead to leverage the use of innovative financing instruments to accelerate Indonesia's SDGs achievements. One initiative pioneered under ASSIST Joint Program is the support towards Indonesia's SDG Bond, which will be one of the great topics that we're going to be discussing today. And as we all know, the past few years, the world has been in a state of volatility as an effect of the COVID-19 pandemic. Essentially, our progress towards achieving the Sustainable Development Goals, or SDGs, have been greatly impacted with concerns over the existing $2.5 trillion financing gap for developing countries being exacerbated by the pandemic. And measures that were taken to quickly rebuild the economy while ensuring the world does not lose its momentum for SDGs. So we asked ourselves, what efforts can be made to stimulate economic recovery from the pandemic, and what are the steps that can be taken to actualize the agenda of sustainable development? Well, our speakers and panelists will help us explore in more depth about leveraging capital for inclusive growth and sustainable recovery, particularly through the use of SDG bonds. And to kick off our events, let us all welcome the representative of UNDP in Indonesia, Mr. Norimasa Shimomura, to deliver his welcoming remarks.
Substantial Assistant to the Minister, Financial Services and Capital Market Administrative Finance, Advisory Director, Stefan, Deputy Minister for Development Funding at the Ministry of National Development. Danny Buchan, Director of Government, Services Ministry of Finance, Julian, the President Coordinator, distinguished speakers and panelists. Good morning. Salamat pagi. It's a pleasure to host this meeting at this regional webinar on SDG Bonds. We are here today to learn about some of the best practices in maximizing the impact of SDG Bonds as a critical source of funding to meet the SDGs. With 2030 approaching very quickly, SDG finance, or lack of it, has become a pressing matter. Prior to the COVID-19 pandemic, Indonesia, like the rest of the world, was already starting the SDGs and the finance of possible achievement. The funding gap in Indonesia alone is estimated at approximately $1.7 trillion. Government alone won't be able to fulfill this goal. Instead, mobilizing capital for SDGs is everyone's business. This is why we at Europe are delighted to accompany Indonesia's process of issuing its first SDG bond last year. Lately, in closer cooperation with our sister UN agencies, UNICEF, and we developed through our program. Our success story should not stop here. We will take it further by focusing on three things
Feedback di YouTube.
and by making more closely and instrumental role Yes,
I think
Much of the proceeds have been used to finance key SDG initiatives to improve social services.
Excellency Ibu Sri Mulyani, Minister of Finance of the Republic of Indonesia, Bapak Luki Alfirman, Director General of Budget Financing and Risk Management in the Ministry of Finance, Bapak Senaider CIM, Deputy Minister for Development Funding from Bappenas, Ministry of National Development Planning, distinguished speakers and panelists, ladies and gentlemen, good morning from Jakarta, and I hope you are all in good health and spirits. I'm really delighted to connect with you all in this virtual space, and I really hope that connecting virtually does not take away from the sense of excitement that today's event brings. The world continues to heal from the adverse effects of COVID-19, which has now entered its third year since it was declared a pandemic. And the outbreak of coronavirus really was a wake-up call for the global community. It has challenged us to build our economies back sustainably with inclusive social resilience as the backbone of a greener future. Of course, this endeavor comes at a high cost. Even before the global crisis, there was an estimated $3.7 trillion annual financing gap for developing countries to achieve the SDG. And COVID-19 has put even more of a strain on national and international coffer. We actually now face the risk of seeing the positive progress towards the SDG being stalled due to a lack of funds. Innovative and sustainable financing instruments are one way to respond to this monumental challenge. These instruments help ensure that women, children, and vulnerable members of the community enjoy the positive impacts generated from public and private capital flows. Their ability to finance the SDGs opens a path for us to build an inclusive future that leaves no one behind. What's more, there is an increasing appetite for innovative, sustainable financial instruments in global markets. Indeed, the green, social, and sustainability bond market surpassed $1 trillion in 2021. And this growing interest gives us hope that we can achieve the SDGs by 2030. Ladies and gentlemen, Indonesia is a pioneer when it comes to innovative financial instruments. Last year, Indonesia became the first country in Southeast Asia and the third in the world to issue a sovereign SDG bond. That issuance will be a game changer in rebuilding the economy inclusively and sustainably, because the UN and its partners invested enormous efforts in ensuring the bond will significantly help Indonesia meet its SDG targets. And Indonesia looks set to continue this pioneering spirit. We are hopeful that we will see further thematic bond issuances from Indonesia in the near future, and that their success will help inspire the global community to undertake similar endeavors. Ladies and gentlemen, Indonesia's SDG Bond is indeed a success story that can inspire other countries to tap into the sustainable debt capital market for the SDGs. And why is that so critical? Well, because achieving all 17 goals require the utmost efforts of all of us. And COVID has put beyond all doubt the idea that anyone can do it alone when it comes to navigating global challenges. With the generous funding from our partners through the joint SDG Fund, the Assist Joint Program increases public and private capital mobilization for SDGs. All the UN agencies provide policy advice and technical assistance to strengthen the regulatory environment for innovating financial instruments and help key stakeholders fully access funds to finance the SDGs. Since its launch in 2021, the Assist Joint Program has continuously supported the utilization of innovative financing instruments, including the development of thematic bonds at the have a responsibility to come together and collaborate for a better world, a world that is inclusive and sustainable. And we need to massively scale up our financing efforts through collective action. The Assist Joint Programme remains committed to supporting Indonesia in maximizing SDG investment by encouraging further issuances of sustainable debt instruments and maintaining positive momentum among stakeholders. The same goes for the entire UN system in Indonesia. So allow me, on behalf of the UN country team in Indonesia, to extend an invitation to all of you to join hand in hand, and so that together we can achieve the Sustainable Development Goals. Thank you, and I wish you all a successful conference. Terima kasih banyak.
Development plan paves the way for an enabling regulatory framework that orients towards sustainable development. This entails every ministry and government agency actively participating in a coordinated and concerted efforts to contribute to the Indonesia SDGs targets. Collaboration among OECD reported that as of early 2021, the SDG financing gap in developing countries is estimated to have increased 1.5 times, reaching $3.7 trillion in 2020. The COVID pandemic has amplified the scarcity effect of the SDG financing gap by increasing financing needs on one hand and decreasing availability of resources on the other hand. The government initiated to align fiscal and budgetary incentive to the SDGs. The climate budget tagging scheme that Indonesia has been developing since 2016 is an example of tackle the climate issue is carbon pricing. This policy aims to change the behavior of the economic actors to switch to low carbon green economic activities so that they can support greenhouse gas emission reduction targets in the medium and long term. This policy is also intended to encourage the development of carbon markets, technological innovations, and investments that are more efficient, low carbon, and environmentally friendly. The implementation of the carbon tax itself will be aligned with the carbon trading mechanism using a cap and tax scheme. To support the acceleration of the energy transitions, the government also proposes a financing scheme strategy for phasing down coal towards achieving net zero emissions in 2060 or earlier through the so-called energy transition mechanism, which was initiated together with the Asian Development Bank. Broadly speaking, this mechanism consists of two parts. The first is the management of financing through the Carbon Reduction Fund, where the managed fund will be used to recover PLTUs that are not environmentally friendly earlier. The second part is through the Clean Energy Fund, where the funds will be used to build new renewable energy-based energy plants. National funds management institutions, such as the Environmental Fund Management Agency, Investment Management Agency, LPI, and PTSMI, can take part in the ATM scheme, either in the form of investment, guarantee, or equity participations. Distinguished guests, ladies and gentlemen, given all of the efforts have been mentioned, the government realized that public funds cannot bear the burden itself, and therefore it needs private sector participations. Over the last several years, market innovators have developed thematic innovative financial instruments in order to accelerate the achievement of SDGs. And one of them is SDGs Bond, whereby the proceeds exclusively apply to finance green and social projects or other sustainability objectives. Although the wide range of SDGs provide issues with many opportunities to help achieve the 2030 agenda, SDG bonds are still in their nascent stage. Further growth in the SDG bond market could come from expanding the categories of eligible assets and projects that contribute to the SDGs with some clear guidance on the SDG alignment. This could allow issuers to tap into new sources of finance. Building a market of SDGs investment in developing countries will be quite challenging, as it requires enough skills, liquidity, transparency, and diversification to attract large institutional investors. We need to encourage financial market planning, particularly in green financial market, including infrastructure and instrument innovations, and guidelines or standard and framework or guideline standardizations on global green financing to build a green economic ecosystem that could increase financial transaction and green-based investment activities. Distinguished guests, ladies and gentlemen, as the G20 presidency in 2022, Indonesia supports the sustainable finance become one of the priority agenda in which we actively involved in leading the sustainable finance working group within the G20 structure. On sustainable finance agenda, G20 is expected to discuss the efforts to develop a just and affordable transition to accelerate green economic recovery. This would need a strong commitment and partnership among countries in protecting the planet, including through sustainable finance agenda and the development of other green financing instruments, such as carbon pricing. With Finland, Indonesia now serves as a co-chair of the Coalition of Finance Ministers for Climate Actions for the period 2021-2023, which suggests global recognition on Indonesia's strategic positions and leadership in climate actions. The government has taken a proactive stance by leveraging financing to drive progress while facilitating a green and inclusive recovery. To close the financing gap and accelerate the transitions to a low-carbon economy, the Indonesian government turns to innovative financing instruments. In 2018, the world's first sovereign green sukuk was issued by the government of Indonesia. Over the course of 4 years, through subsequent issuances of green sukuk in both global and domestic markets, around $4.3 billion was raised and mobilized towards the government green projects. Building upon this success, Indonesia also became the first country in Southeast Asia to issue an SDG bond in the global market, raising €500 million in 2021. Of course, we thanks to UNDP and other UN agencies that help us in preparing the issuance. This is a strategic move for the country as a growing economic powerhouse in the Asia-Pacific region and as a member of the G20 with presidency mandate in 2022. The SDG Bond provides new means of financing for Indonesia to fast-track achievement of the SDGs and address inequalities, particularly in line of the pandemic, enabling the government to finance priority projects such as education, health, and access to telecommunications. The government of Indonesia quickly understood that SDGs and socioeconomic recovery are not mutually exclusive and should not be treated as such. On the contrary, embedding SDGs principles into recovery strategies goes hand in hand and will strengthen recovery, while at the same time
Pastikan bahwa penguatan ekonomi kemudian berlaku.
the numerous standards expected of thematic instrument allow for a scrutinized and careful approach throughout the bond's life cycle, ensuring the impact's longevity. We have seen how thematic bonds as an innovative financing instrument can serve as means to raise the much needed financing for an inclusive recovery. And hopefully this can inspire other actors and stakeholders, both nationally and globally, to also reorient investment and undertake innovative approaches to finance the SDGs. Throughout the journey, I would like to also highlight the important role of the development partners to strengthen capacity and build the enabling environment for sustainable financing. In this case, we appreciate the strong partnership with the UNDP, who have stood with us throughout Indonesia's journey in our thematic bonds initiative, which started during the development of the framework and leading to the successful pioneering issuance. Distinguished guests, ladies and gentlemen, perhaps several years ago, the world did not expect to see the use of financing in such a way which we are using. This highlights the shifting outlook that we all have to see financing instrument beyond profit making, but as a real driver for long-term sustainable impact and maximize it for the greater good of the world. Along with the structural reform post-pandemic COVID-19, Indonesia is keen to look at a big role of the SDG financing in Indonesia financial sector reforms. Indonesia has potential to be world leader in green finance due to its huge carbon market potential, which would attract not only the creation of creative investment instruments, but also more long-term funding. Indonesia is also active in promoting risk mitigations due to climate change as a comprehensive strategy in developing sustainable finance. Together with the launch of Indonesia Green Taxonomy by President Joko Widodo early this year, we believe that the initiative would enhance Indonesia's commitment towards net zero emission target. I hope Indonesia experience can be taken as a success story that inspires other issuances, encouraging more and more countries to leverage thematic bonds for SDG achievement. Since Indonesia issuance of SDG Bond was built out of partnership and collaboration, I too would like to extend an invitation for a future partnership and unlock the full potential of an innovative financing for SDGs. We fully understand that our work is far from that, especially during the most challenging time of COVID-19 pandemic. However, the progress we have achieved so far and our collective consciousness to recover stronger should be the reason for us to strive and reach even greater heights. Once again, I would like to express my appreciation for the organization of this activity. Through today's discussion, I believe this event will not only strengthen partnership of various stakeholders, but also increase awareness and understanding on the leverage of SDGs bond towards inclusive growth and sustainable recovery. Finally, I wish you a fruitful discussion, and I hope that the result of today's discussion can make a positive contribution to all of us. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh. Selamat pagi.
Well, thank you very much, Dr. Suminto, for the excellent and very insightful keynote speech. And ladies and gentlemen, before we delve into the discussions, I'd like to once again say a big hello and thank you to our audience, those logging in on Zoom or on YouTube. On behalf of our dearest organizers, we sincerely say thank you and would like to extend our profound gratitude for your support, for your participation, and for your attendance here today. So now, ladies and gentlemen, for our first topic of today's discussion, I would like to invite the Managing Director and Chief Representative for Asia of the Pacific member of ICMA Executive Committee, Mr. Mushtaq Kapasi, to lead us together through the topic of global SDGs investments landscape, looking at the progress and trends of the thematic bond markets. And after Mr. Kapasi's presentation, we'll have a Q&A session with the audience. So please do not hesitate to write down your questions in the Q&A box on your screens, and then afterwards, I will read them out for you. And Mr. Kapasi, without further ado, the time is yours.
Thank you very much for the extremely kind introduction. Good morning. Assalamu alaikum to everybody. I would like to express my sincere gratitude to the UNDP and the Indonesia Ministry of Finance, who have really honored me and ICMA by allowing me to present to you this morning. First, I would like to encourage questions. I certainly enjoy speaking with people more and hearing their questions more than giving presentations to an audience that I cannot see. So please do feel free to put questions in the chat or to the organizers. And secondly, I will monitor the chat just in case there's any problem with my sound. Please do let me know if you cannot hear me clearly or if there are any issues, and I'll do my best to resolve that. Okay, let's get started. My job at ICMA is to represent our organization in the international capital markets. We are a trade organization, a trade association for the bond markets, generally covering primary markets, secondary markets, repo transactions, collateral, these sorts of issues. But over the last 8 years, we have been increasingly involved in the sustainable finance market. Why is that? Because we now, from ICMA, are helping to manage and facilitate the green bond principles, the social bond principles, and now the sustainability-linked bond principles, as well as transition finance guidance. So my presentation will cover those today and their role in financing sustainability. We are extremely impressed and grateful for the leadership of the Indonesian government in financing the investments needed to address climate change and produce a just transition. But as we have heard, and as we all know, public sector investment may not be enough, and private sector does have a role to play. One of the most effective ways for the private sector to fund the addressing climate change and social programs is through these thematic bonds. And ICMA plays a very, I hope, important role in facilitating that. So this first slide will show the growth of the sustainable bond markets. We have seen sustainable bond markets almost didn't exist back in 2013, 2014, and now they're a very significant part of the overall bond markets, especially in Asia, where we're seeing that sustainable themed bonds are a very high percentage, up to 16, 20% of international issuance coming out of Asia. This is from a bar of almost zero and far higher than that of other jurisdictions. So if we go to the next slide, I'll talk a little bit about what ICMA does. We produce the green bond principles, the social bond principles, and the sustainability linked bond guidelines. Could we go to the next slide, please? Thank you. These are the principles produced by ICMA. And what are these? What is the role that they play? Why do they exist? Why do we even have thematic bonds? Well, I think the one word answer is credibility, right? So put it in very practical terms. If you have an issuer from Indonesia, even the government, for example, and they want to use these thematic bonds, they want to raise capital to fund sustainable projects, to fund sustainable programs. A very effective way to do this is through the sustainability bonds. Now, if they want to do this, how can investors in the rest of the world know that the money will go to the right programs? How can the investors know that the impact of those investments will be solid? How can the investors know that the issuers themselves, maybe not talking about the government, but perhaps a corporate or a bank that investors across the world will not know? How can they know that that issuer has a truly green strategy, that they have a really good way of achieving net zero? Well, these principles from ICMA help to ensure that. And one thing I should mention is that these principles are not designed by myself and colleagues. Actually, what we do is we bring together over 300 institutions from around the world, including banks, investors, issuers, governments, NGOs, and we facilitate the drafting and the evolution of these standards to help the market have very basic guidelines, very basic principles to ensure that green, social, sustainable bonds truly are that. So essentially what these principles are doing is they're giving global standards to make these instruments credible, to make sure they're transparent, and to make sure that the market can thrive. And basically to prevent greenwashing, right? This is something that we've been thinking about more than 8 years ago. So what are the principles that ICMA puts out? These are the documents that are actually available on our website. They're free of charge. I encourage you to download them and read them yourselves. They're actually quite short and they're quite simple to read. So it's really not much of a problem. You can just Google ICMA Green Bond Principles, Social Bond Principles, or any of these, and you can get them free of charge. So we publish the Green Bond Principles, the Social Bond Principles, the Sustainability Bond Guidelines, and the Sustainability-Linked Bond Principles. Let me just highlight one difference between two different kinds of these. Okay, green bonds and social bonds, these are the traditional sustainable bond instruments. And the way these work is they're defined by the use of proceeds. So basically, any bond where the proceeds are used for green projects or social projects or a combination of both of those projects can be a green social bond. A sustainability bond under the ICMA definition is just a bond that has a combination of green projects and social projects. Sustainability-linked bonds might be a little confusing, but please don't be confused. Sustainability-linked bonds is a new type of instrument that was introduced just in 2020. And these have a different structure. With sustainability-linked bonds, the proceeds can be used for any purpose. They can be used for general operating expenditures or any kind of capital investment. The difference is that the economics of the bond can be linked to a sustainability goal, a sustainability KPI, an indicator, a target. So there's a specific sustainability target, and the issuer has to meet that target by a certain date. Whether they do or don't, the actual payments under the bond might change. So this is a completely different type of instrument than a traditional green bond, but it's also very much embedded in sustainability, and it's considered a sustainable bond type instrument. I'll go into a little bit more detail now. Next slide, please. All right, so green, social, and sustainability bonds, again, I'll just remind you over and over again, these are ones where they're defined by the use of proceeds. The economics of the bond, the coupon is just like a normal bond. The credit provisions, the events of default are really just like a normal bond. The main difference is that the use of proceeds is for green or social instruments. And you may be asking, what about SDG bonds? I will get to that, don't worry. Basically, SDG bonds can be green, social, or sustainability bonds. So don't worry, there's no separate category for the SDG bonds. And how do you differentiate between green and social bonds? Well, the green and social bond principles from ICMA have very general categories for what is green and what is social. Basically, for green bonds, there are a number of different environmental categories, which are the ones we're all familiar with, including things like biodiversity, climate change mitigation, etc. Social bonds, we also have a categorization of sort of taxonomy of different kinds of social projects. But the important thing about a social bond is that it also has to go towards a target population. So an underserved minority, or for gender issues, or for those who deserve better treatment who are not getting it in normal society. Again, just a reminder that a sustainability bond is a combination of the two. Next slide, please. And one more note here is that besides the green bond principles and the social bond principles and sustainability bond guidelines, one thing that's very important with all of these is external reviews. So generally speaking now, it's expected that you get a second party, third party to review your green bond or social bond to make sure that it covers all the requirements of a green bond or social bond. And there are 4 pillars of the green and social bond principles. Use of proceeds, which we've talked about already, but that's not absolutely enough to make a green bond really credible in the market. You also need to disclose to issuers how, as an issuer, you're choosing the projects to make sure that the money will go to the right place, and that investors will be confident that the money will go towards the right kinds of projects. In your life of the bond, you have to have a robust way of managing the proceeds, either by keeping track of them or by having them in a separate entity, just to make sure that that money that comes in for your issuance goes straight to the green or social projects. And then there is reporting. So you have to report on the projects that are being funded. and you have to report on the impact of those projects. That can be a little bit tricky depending on the types of projects, but we do expect in the Green Bond, Social Bond, and Sustainability Bond principles some sort of reporting of impact. Next slide, please. A little bit more about what green bonds can finance, and I'll just let you look at this slide and peruse it very quickly. But you can see that green bonds can finance a number of different things and are extremely compatible with the SDGs. So things like green buildings, clean transportation, energy efficiency, renewables, climate change adaptation, pollution prevention, all of these are part of the SDGs. So if you are financing these sorts of things pursuant to an SDG financing, these can absolutely be part of the green bonds, and they can be compliant with the green bond principles. Next slide, please. The same thing can be said of social bonds, and I want to highlight a couple of very interesting or very pertinent use cases today. So one thing people have been asking, especially during the pandemic, is can green bonds and social bonds finance addressing the pandemic? And the answer is absolutely yes. So ICMA has issued guidance related to COVID-19 and addressing the pandemic. So for example, if you have an SDG bond, if you have a social bond that is funding vaccines, that is funding hospitals, that is funding measures to address unemployment even, or other social measures, education, for example, to help mitigate some of the economic effects and some of the difficulties that have been caused by the COVID-19 pandemic. All of these are very legitimate uses of proceeds for a social bond, and they can very much qualify as social bonds under the ICMA principles. So we very much encourage the use of social bonds, the use of SDG bonds compliant with the social bond principles to address some of the effects of the pandemic, either directly or indirectly. Next slide, please. I talked a little bit about impact reporting, and I don't want to go into this in too much detail, but if you do have questions, please ask. Basically, ICMA has issued guidance on impact reporting, both for green projects, and if you go to the next slide, and for social projects. This is a bit more technical, but I just want you to know that the guidance is out there, and you can download, again, you can download this from our website, and many of the external service providers and consultants will be very sophisticated in terms of impact reporting, but it is increasingly important today in green bonds. Next slide, please. Now, I will just touch upon sustainability-linked bonds. So this is another type of themed bond. It's relatively new, and it's somewhat innovative in the market. Again, this type of bond is a little bit different from the traditional kinds of green bonds, but this one actually could be more useful for some corporates who do not have a large portfolio of projects. So remember that green bonds and social bonds, it's about financing projects, right, through your bonds. But let's say you don't have a large portfolio, or you're not sure that you can spend all the money immediately on these kinds of bonds. So a sustainability-linked bond could be an interesting solution because it is a legitimate, sustainable themed bond. And here, as an issuer, what you'll do is you will set an ambitious target for sustainability. It can be emissions reduction, it can be for diversity, it can be educating people. It just has to be related to your business, and it has to be related to a real sustainable goal. And then once you do that, you will link the economics of your bond to whether you will meet that goal or not. And this type of instrument has grown considerably over the last couple of years, and it can be extremely important, and it can be quite useful for an issuer to help get funding in to fund sustainable projects, but without necessarily having to follow all of the use of proceeds guidelines under traditional green bonds. Next slide, please. And then last but not least, I'll just mention climate transition finance. This is an area of great conversation within ASEAN. And what we're trying to do here is give guidance for extra disclosure for issuers that may be on a transition pathway, that may not be immediately green and may not have the credibility as a dark green issuer. If you are in fossil fuels or some kind of sector that's not totally green, then the climate transition finance gives guidance for additional disclosure to show that you are on a legitimate transition pathway towards net zero. Next slide, please. All right, and this is my final slide. I promised you I would talk a little bit about SDGs, right? So as you've seen, the ICMA principles do not have a separate set of principles for SDG bonds. We have green bond principles, we have social bond principles, but we do very much encourage bonds that are financing the SDGs. And I'll just make 2 points here. So first of all, bonds that finance SDGs can very much fit within the green bond and social bond framework, and investors will expect this. So it's important to make sure that your use of proceeds or your sustainability goals are compatible with the green and social bond and other principles, okay? But you can still call your bonds SDG bonds. It's still totally fine to have that as a thematic label for your bonds. And then what we've done at ICMA to try to be helpful in this respect is we've done a high-level mapping between the green bond and social bond principles and the SDGs. So for example, if you want to issue a green bond or social bond, you can look at how that maps to the SDGs and the specific goals under the SDGs themselves. Or if you have a corporate strategy that's linked to the SDGs, you can see immediately how that maps to the green and social bond principles. So again, this is a free of charge. It's a very kind of simple mapping. It's not rocket science, but we hope that it's useful to the market, and particularly in Indonesia with your focus on the SDGs. So I will end there. Thank you very much for your attention, and I'm happy to take your questions now.
Thank you very much, Mr. Musa Kapasi, for the great insights, very informative on the trends and progress of the thematic bond market. And now let us start our Q&A session. And we have received several questions from our audience, Mr. Kapasi.
Okay.
To read them out for you. This one is from Ms. Listiarini Dewa Janti. And the question is, how about sustainable link loans? Can it be applied to the same concept or guidelines as the SLB? Mr. Kapasi.
Oh, yes, very good question. Thank you. So I do apologize that ICMA's focus is on bonds. So we are not necessarily a loan organization, but I am very aware of the sustainability linked loan concept, and we absolutely support it. The good news is that sustainability linked loans are equally valid as a way to finance sustainability. And the standards behind the sustainability linked loans, which have been separately published, are consistent with the sustainability linked bond guidelines. So really, you follow the same principles. You want to have a sustainability target that's legitimate and related to your business. You want to have a metric that's related to your business. You want to have a target that's ambitious. You want to have reporting. You need to have external verification. You need to have transparency. This is exactly the same concepts for sustainability-linked loans as for sustainability-linked bonds. I think the main difference, though, is just the investor base, right? With sustainability-linked loans, you'll generally have investors who know the company very well, a smaller group, and they might have other relationships with the issuer. With sustainability-linked bonds, your target investor base might be a bit wider. They might not know the issuer as well. So I think that in the sustainability-linked bond space, it's going to be much more important to have very good disclosure and more information about the issuer.
Excellent explanation, Mr. Kapasi. And our next question is, how do you set up the KPI for the sustainability-linked bonds?
Yes, a very good question. This one's difficult because there's a lot of debate right now about how to make a sustainability target that is ambitious enough, right? And then I think another issue that's very live in the market right now is the change in economics. So what is the change? What is sometimes it's called a penalty. I don't want to call it that, but what are the changes in economics, the incentive for the issuer to meet that target? Now, this is not, I would say it's an art more than a science right now. And my recommendation would be that there is no hard and fast rule, right? I think it depends on the sector. It depends on where the issuer is initially. It depends on kind of what the standard practice is for comparable bonds in the market. And I know that's not super helpful, but I think there is some good news, is that many of the professionals involved in structuring and issuing these sustainability-linked bonds are very sophisticated in this regard. So I would advise any issuer that is interested in a sustainability-linked bond to talk to external reviewers, to talk to their investment bank relationship people, and especially those involved in sustainability. And I think you can get very good advice. But I think this is really kind of a moving target. And I think that issuers have to think very carefully to strike a balance between getting a target that is not too easy. Otherwise, investors will think that the issuer is not really serious about sustainability, but not too hard as well, because the issuer wants it to be something they can meet and that they can see as a realistic target.
Thank you very much, Mr. Kapasi. And the next question is, would it be feasible to issue sustainability bonds for carbon-intensive industries? And what would be the strategic steps? And if you have any market insights or perceptions on that, Mr. Kapasi.
Yeah, that's a good question. And actually, the answer to that has changed over time. Let me give just a little bit of history here. So when green bonds were basically invented, when we first had the green bond principles, the idea was really about use of proceeds. And I think the general sense of the market was that the issuer doesn't matter, right? Because what we're really concerned about is that we're going to have renewable projects and green projects that are funded. So just to be very concrete, you could have an oil company that was financing wind farms, and that would be considered a totally legitimate, no problem kind of green bond. The market perception has now changed. And now, if you want to issue a green bond and you want to fund, even if you want to fund totally green projects, investors are going to look at the credibility of the issuer in terms of its own environmental strategy, in terms of its overall operations. So if you are, again, to use this example, if you're an oil company, you want to issue green bonds to finance wind farms, that is okay. But now in 2022, you need to do more work. And so first of all, you're going to have to convince the market that you are on a credible transition pathway, right? You're going to have to show that even though you may not be green right now, that you are working towards net zero, or you're working towards a Paris compliant pathway. And I very briefly mentioned ICMA's climate transition finance guidance. So from a strategic point of view, as an issuer, you would need to have additional disclosure, and we would recommend that disclosure be compliant or compatible with our transition finance guidance at the issuer level to show that you are a credible issuer in the market. And then I think the other thing that would be important is to get a very good external review to make sure that you have in place the right controls to choose the investments, that you have ongoing disclosure about the impact. That's going to give investors a lot more comfort. So I think, yes, it is possible for a non-green issuer to issue green bonds today, but I think there's more skepticism, there's more concern about greenwashing, and that issuers are going to have to do more work and particularly more disclosure.
Thank you so much. And Mr. Kapasi, do you have any concerns at all over greenwashing, meaning companies attempting to issue green bonds to improve their sustainability brand and image without particularly or necessarily improving ESG standards?
Sure. Yes, we get this question a lot. My short answer is that I actually feel, and I'm biased here, but I actually feel quite confident that the green bond principles themselves, the social bond principles, as well as the overall sustainability infrastructure that we have in place, is quite good to prevent greenwashing in the bond market. So we have definitely seen instances of greenwashing, which is kind of deliberate misinformation when corporates are talking about their net zero strategies, or with funds, for example, right? There have been some headlines there. But when it comes to green bonds, when it comes to SDG bonds, first of all, 98% of sustainable labeled bonds in the market last year were aligned with the ICMA principles, right? So if you are aligned with the ICMA principles, then it's pretty difficult to mislead the market about your green credentials or the greenness or the social purpose of your projects. If you are agreeing to adhere to all of these requirements of green bonds, you've already had to put in place your internal process for choosing projects. You've already had to put in place your internal process for reporting. You've already had to decide on metrics, right? You already have to have a portfolio of green or social projects. So really, if you've done all that work already, what is the point? The issuers will have no incentive or even a way to kind of mislead the market anymore. So that's one point. I think you've already done all the work having to issue a bond under the principles. So I think the risk becomes less. I think the other thing, though, is also just from a checks and balances point of view. If you are an issuer and you want to issue a SDG bond, for example, and I'm sure the government of Indonesia, the Republic, can attest to this as well, you have to hire, the bankers to distribute your deal. You have to go on roadshows to issuers. You have to get an external review, right? And if you are intending to do something that's not green or do something that's not really sustainable, then I can assure you that the banks will not want to work with you. The external reviewers will not give you a favorable review. So if you really want to go into the market in a legitimate way, you will have to get to the support of other market participants who also have their own reputational risks and who also have their high standards. So I think all of these I wouldn't even call them barriers. I would say all these steps that you need to take to issue a sustainable bond, they may seem onerous, but actually they serve a very good purpose, which is making sure that companies that have some sort of intention of greenwashing actually cannot do so.
Thank you very much, Mr. Kapasi. And okay, one last question that we have from our audience for you. Some banks are now turning to the green bank that can provide loans for green investments. So why do we need green bonds, Mr. Kapasi?
Ah, yes. Well, maybe someday we won't need green bonds anymore. This is almost our hope, that green bonds will be absolutely obsolete because every investment, every bond will be financing, sustainable projects and projects that are social. So, this is actually a long-term hope, and in some sense, we are moving in that direction, right? We're seeing regulation right now that is requiring investors to look at the overall climate impact of their whole portfolio, whether it's green or brown. So we see this transformation happening already. And so I think, though, having said that, though, we're still in a transition phase, right? We're seeing green banks, we're seeing some of these wonderful initiatives coming out that hopefully will obviate the need for green bonds. But for now, we still do have green funds. We still have investors looking for green investments. We still have lots of non-green investments as well. So I think at least in the short term and perhaps in the medium term, there is a purpose to be served by sustainable bonds. And again, what is the purpose of the ICMA principles? It's really to preserve the credibility of this, which I think is something that we still need, right? We're still seeing the risk of greenwashing. So I think having the green bonds in place, having the principles that prevent people from misleading the public and making sure that we have adequate disclosure for these, I think that's still important to have in this day and age. Hopefully, it won't be the case in the future once everything is green, once everything is compliant with SDGs. But I think for now, it can serve a useful role.
Thank you so much, Mr. Kapasi, for the great insights. We sure have gained so much from you. Unfortunately, in respect to time management, we're going to have to close the Q&A session. However, Mr. Kapasi, you're very popular. We still have so many questions for you from the audience.
Thank you.
We'd like to kindly ask you if you could answer them via the Q&A box. We'd really appreciate it.
Sure, I can do that. Yes, I have to leave in about 15 minutes or so, but I will answer them in the Q&A box, and I can also put my email so that if anyone wants to contact me directly at ICMA, they can feel free to do so.
Thank you so much, Mr. Kapasi, and thank you for allowing us to pick your brain.
No, no problem. It's my pleasure. Thank you.
Thank you. And distinguished guests, ladies and gentlemen, we now have come to our first panel discussion. We're going to discuss an array of topics surrounding proof of concept, real use cases of thematic bonds issuance. We have three of the greatest minds behind SDG or Sustainable Development Bonds issuance that we have seen in the markets. And let us welcome our speakers. The Director of Government Debt Securities from the Ministry of Finance of the Republic of Indonesia, Mr. Denny Ridwan, and the Head of External Financial Market Division from the Ministry of Finance of Uzbekistan, Ms. Nargiza Nikmatova, and the Lead Financial Officer of Capital Markets and Investments of Treasury of the World Bank, Mr. Yoshiyuki Arima. This panel discussion will be moderated by the SDG Finance Policy Advisor from UNDP. Let us welcome Ms. Radhika Lau. Ms. Radhika, the floor is yours.
Thank you very much, and a warm welcome to all the distinguished panelists. So just to give you a quick overview of how this panel will be run, we'll first start off with a quick question to all the panelists. And I can just go on the order I see on my screen, starting off with Mr. Radwan, then going to Ms. Nikmatova, and then to the representative from the World Bank. And then there'll be a second round of questions, which will be targeted at each one of you to get into more specificities. So let's start off with the first question, which is one that we also get quite a lot. So really looking forward to your response. What's the motivation for issuing an SDG bond? We know that it involves extra work, compared to a vanilla bond. And so what would be the additional motivation to do this, given the effort required, some of the costs involved? So really looking forward to your perspective on that. And then secondly, a second part of that question is, what are the enabling factors for a successful issuance of an SDG bond? And any of the challenges, if you'd like to go to talk about that. Let's start with Mr. Radwan. Indonesia has been issuing green bonds, green sukuks for quite a while, but you issued the first SDG bond. So please tell us why you did this and what were some of the factors involved. Over to you.
Okay, thank you very much for the question and thank you for having me. I think based on our experience, both internal and external factors have equally important part of our decision to issue SDG bonds. So internally, Indonesia is strongly committed to achieve the 2030 Sustainable Development Agenda. But in order to achieve the SDG and implement climate actions, financing will serve as a key driver of progress. And according to the national SDG roadmap, Indonesia will need, as mentioned with Pak Suminto in earlier, around 400 to 700 billion to achieve the 2030 SDG target. In addition, we also need around 300 billion for implementing climate mitigation action until 2030. So therefore, one of the greatest challenges here lies in the existing gap between the need and the available state financial resources. This indicates that reliance on the state budget alone will not be sufficient, and other funding sources need to be explored. And building on the successful of global green issuance, as you mentioned, the government of Indonesia is exploring other alternative of innovative finance, one of it through the SDG bonds. And on the other hand, regarding the market pressures, market opportunity, the data show that investor demand for several large asset managers has increased for socially responsible investments. For example, according to the analysis provided by the Bloomberg Intelligence, global SDG asset was around 13.3 trillion in 2012. However, current projections indicate that these assets are on track to exceed 53 trillion by 2025, representing more than a third of the 140 trillion in projected total under asset management. If I may share as well, last month we conducted a series of investor updates to our major investor in US market. One of key takeaway from the meetings almost all investors have interest or plan to increase ESG papers in their portfolio, and some of them has established a dedicated unit or dedicated team to handle ESG investment. So therefore, the issuance of SDG bond is intended to meet the increasing demand for socially responsible investment and broadening our investor base. And regarding the enabling factor to facilitate the successful of SDG bond issuance, first, the need for unparalleled commitment and leadership and coordination due to the long process required and the number of stakeholders involved. Second, the need to have incentive communication to have intensive communication and education to investor via roadshow and investor meeting. We believe it's important to continue maintaining an open and a frequent dialogue with investor, focusing on introducing investor to our frameworks and presenting an update on the Republic's economic development and credit story. And lastly, under the list, finding the right partner. So due to the novelty of the structure, finding the right partner are paramount. In our case, we are lucky we receive assistance from the UNDP in the budget taking process, also in developing the green frameworks and SDG government service frameworks along with advisors bank. And we at the Ministry of Finance appreciate the great collaboration and extensive support from the various stakeholders, like the Ministry of National Development Planning, Bappenas, the Coordinating Ministry of Maritime and Investment Affairs, along with UNDP and Investor Bank. We have developed a strong partnership to this journey. Under the spirit of scaling up and further advancing Indonesian innovative and sustainable financing landscape, we are pleased also to have to receive support from the United Nations Joint Program Accelerating SDG Investment Indonesia, or ASIS, collaboration between UNDP, UNEP, UNICEF, and UNIDO country teams. So I stop here. Thank you. Back to you.
Thank you very much, Mr. Radwan. I'll come back to you with some follow-up. But now over to the representative from the Ministry of Finance of Uzbekistan. Can you tell us from your perspective, from the ministry's perspective, why issue an SDG bond? And what were some of the things you were looking at in terms of the framework, and what are some of the impacts that you're seeing from having issued a SDG bond?
Thank you very much. Good morning and assalamu alaikum, dear colleagues and participants. First and foremost, I would like to thank you very much for your invitation to participate in today's webinar. Let me start with the reform program that Uzbekistan is aimed at, and it's undeniable that Uzbekistan is started transitioning towards more open and market-based economy in 2017, and this ambitious reform agenda paved a way for Uzbekistan being one of the few countries in the world to place SDG bonds at London Stock Exchange in July 2021. And this SDG bond issuance also demonstrates the government's strong commitment towards achieving the SDG agenda and awareness of the country's increasing financing gap to meet this country's needs. Estimates from 2019 revealed that the additional annual investment of around $6 billion would be needed to meet the national SDGs. Worth noting that the SDG issuance amounting to $235 million attracted the interest of more than 30 investors from the United States, UK, Germany, and other countries. And the SDG bonds were issued in local currency in Sum with dollar settlement and was oversubscribed in short period of time. And finally, I should say that the lowest coupon rate for such local currency was achieved, which was 14%, Prior, such issuance was at around 14.5%, which demonstrates that the little cost of funding advantage. And apart from that, one of the rationale behind the issuance was the fact that the issuance of SDG bonds, they are followed by impact reporting, which is crucial. I mean, in the sense that it will increase transparency, increase efficiency in the use of proceeds, as well as overall overall public debt. And to wrap up things, the motives behind the issuance are reducing the financial gap of the 2030 SDG agenda, to encourage private sector participation in sustainable development agenda, expanding the investor base by accessing the international funds committed to sustainable development, and increasing transparency and efficiency in the use of proceeds of the public debt. So talking about the key success, key enabling factors for success, as well as some of the challenges, I should start with the challenges, because one of the remaining key challenges in the overall SDG bond issuance and post-issuance remains the building appropriate capacity, working with ESG and SDG linked instruments, which are the cornerstone, right, for the future development in the area, I believe. And but for that, Minister of Finance of Uzbekistan signed a memorandum of understanding with UNDP, and for better alignment of the issuance of Eurobonds, with efforts to achieve SDGs and building transparency, accountability for national, public, and investors. I believe that the key factors for facilitating a successful process of SDG issuance for us was the collaboration with UNDP in this way of acquiring the financing, which was not familiar to us prior, and as well as, I think, it's well preparation. By well preparation, I mean that the Minister of Finance issued 1 year before the bond, which was not SDG, but with high development impact, and received the qualification from JP Morgan Bank, and this bond treated as SDG bonds, as if it was an SDG bond. And we did the reporting, the allocation report and impact report, and all the processes were as if it was an SDG bond. So it helped us a lot for preparation of the actual SDG bond issuance. And yes, I think this is all right now for what I wanted to share. But about the impact of measuring the impact of the SDG bond proceeds, I think that currently we are working in collaboration with the UNDP experts, as well as Minister of Finance responsibles, on the allocation and impact report of SDG bond issuances. And hopefully we will be able to share with the report in July this year, after being reviewed by external parties. And however, I should say that the proceeds will bring social and environmental benefits, such as providing affordable and quality education, improving quality essential healthcare services, affordable transportation, climate change mitigation, effective waste management, energy savings, as well as greenhouse gas reductions. Thank you very much.
Thank you. Lots of interesting points there, including the way you mentioned doing this almost practice run before the issuance of the bond. Thank you very much. We'll come back to you. Now over to Mr. Arima to get a perspective from the World Bank, which is where bonds are a key part of your own business model. What do you see as the benefits for countries issuing SDG bonds, and what makes the frameworks impactful? Over to you.
Thank you. Can you hear me?
Perfectly.
Okay, great. So the World Bank, as you know, World Bank has been a long-standing bond issuer to borrow money to finance developing countries. So our recent approach is that what we do all is social. Therefore, all the bonds we issue must be social bond eligible. So ideally, I think all the borrowers would get to that point, that all that to prove investors that all activities are doing a good for the social and the society. But right now, I think we are the unique institution, so it's not easy for everyone. But the important starting point is that a disclosure. So in the past, when bond investors make investment decisions, they look at the yield, in other words, spread over government bonds. Then the tenor, that's the maturity, how long they invest in, and also liquidity, how easy investors can sell or buy those bonds in the secondary market. So, but recently, we noticed that in addition to those 3 points, it's getting increasingly important and critical for the borrowers to disclose the social impact of the proceeds borrowers get from investors. So in that respect, we believe the disclosure of impact is really important for us, for the World Bank bonds, because we are fortunately or unfortunately AAA rated issuer, meaning the financial yield is super low. So the brand name of a World Bank bonds is, I believe, I hope it's famous and good for investors. But in turn, the financial return is so low. So it's not that easy for all investors to make a decision to actually buy World Bank bonds. So we have to do the really good impact reporting. So that's the reason why we develop the impact report together with investors. So we communicate with investors more than ever, very frequently, to integrate what they want to know in our impact report. So right now, the financial disclosure has a long history. So I think it's almost matured, and there's not many space for the development. However, the impact reporting is just started for everybody. So what is important for borrowers like us and the governments is to communicate with investors as much as possible to develop the new standard for impact reporting. That's our sincere experience. Thank you.
Thank you very much. Very interesting. I mean, what you're saying also suggests, some good news for the SDGs, that there is this investor interest, and also the benefits of disclosure, for sustaining that investor interest. Back to Mr. Ridwan now for a question to tell us a little bit about how the framework was developed. What were the principles, the methodology, the process that Indonesia used for the development of the SDG Bond framework?
Okay, thank you for the question. So we developed the Republic of Indonesia SDG Government Securities Frameworks in September 2021 as expansions from the previous Green Sukuk frameworks established in 2018 when we issue the Green Sukuk. So we have developed the SDG Government Securities Frameworks to demonstrate how we intend to issue broader aspect of sustainability through green and SDG securities. The proceeds will be allocated to finance environment and social projects in contribution to the 2030 National Development Agenda. So in developing the frameworks, the Ministry of Finance, Ministry of National Development Planning, the coordinating Ministry of Maritime and Investment Affairs, with support from UNDP and Fishery Bank, we have been working collaboratively toward the development of ROI SDG government securities frameworks as the basis for Indonesia sovereign thematic bonds, comprising green, blue, and social as the main focus. So the green and SDG securities issue framework will be aligned to the respective applicable market standards. For example, the 2021 Green Bond Principle, 2021 Social Bond Principle, 2021 Sustainability Bond Guidelines, or as they may subsequently updated. The Green Bond Standard, Social Bond Standards, and Sustainable Bond Standard from the Asian Capital Market Forum. So we expect that our frameworks was well received by the investors and also have the alignment with the existing global standards. Thank you. Back to you.
Thank you. Thank you very much for that. And now over to Uzbekistan to tell us a little bit about how you prioritize the themes and the sectors for the use of proceeds from the SDG bonds. Is this one going to finance, and how did you make that selection? What were some of the issues, and what kind of impacts are you seeing? If it's possible to talk about that. Thank you.
Thank you very much for your question. So yes, Uzbekistan's SDG bond framework, which was adopted last year in June, it defines that the SDG bond proceeds are allocated to the projects aimed at advancing progress against targets in the National Development Plan, which are aligned fully with the Uzbekistan's SDG targets. The allocation of SDG bond proceeds will be done as stipulated in the framework, and the amount equal to the net proceeds of the SDG bonds will be exclusively used to finance or refinance eligible assets, providing distinct social or environmental benefits that further one or more SDGs. Eligible projects include investment expenditures, fiscal expenditures, subsidies, and other operating expenditures, as well as other spendings to meet Uzbekistan's eligible environmental and social projects that have taken place not more than 3 years prior to the issuance of SDG bonds. Also, framework stipulates that the proceeds will help to finance public SDGs-oriented projects in areas such as education, water management, healthcare, green transportation, pollution control, management of natural resources, and green energy. This includes the construction and reconstruction of public schools, kindergartens, national libraries, promoting sustainable water management and upgrading irrigation systems, construction and reconstruction of healthcare institutions and public transportation systems, waste collection projects, renewable energy, power plant constructions, and afforestation and conservations, along many others. So in order to identify eligible projects, eligible expenditures, we have analyzed the budget expenditures for the year of issuance, which was 2021, our National Development Plan, investment program, and strategy on transition to the green economy, and the concept for ensuring reliable energy supply of Uzbekistan towards 2030. And as a result of this analysis, we come up with eligible projects, eligibility criteria for each of the 7 categories, along with social and their environmental benefits, target population, and SDG contributions, which are all stipulated in our framework. The process itself, the allocation and selection process itself involves respective line ministries such as Ministry of Healthcare, Ministry of Public Education, and etc., as well as the departments of Ministry of Finance that are responsible for financing the sectors of such as agriculture, healthcare, social projects, etc., and the public debt management department, as well as SDG Coordination Council, which was established in 2018, and of course the UNDP. Respective ministries provide a list of projects to the Minister of Finance. Minister of Finance, together with the representative with respective departments, screens all the potential list of projects. And finally, after filtering, the list, the potential list will be given to SDG Coordination Council, which is headed by Deputy Prime Minister, and for final approval. After the approval, we will be able to issue the allocation and impact report. So UNDP acts as a key partner for us in selecting these eligible projects. To talk about some of the measurable impact, currently the project office, in close collaboration with the UNDP and their experts, are working on the allocation and impact report, which hasn't been finalized yet. Hopefully, we will be able to share with the report in upcoming months after the external reviews of the parties. However, I can say that the proceeds will bring strong social and environmental impacts, such as providing affordable and quality education, improving quality, essential healthcare services for all, affordable transportation, climate change mitigation, effective waste management, and energy savings, as well as the climate mitigation. Thank you.
Thank you. Very interesting. Just a quick question that I was actually asked from by some of my colleagues. Is there a gender focus in terms of these funds? I mean, in terms of the SDGs, are you looking also at some of the social impacts in terms of some of these sectors that you've outlined?
Yes, thank you very much. Very good question. Yes, gender equality, gender issues are on the top of our priority, I would say. And of course, gender equality is stipulated at target 5, right? SDG 5 also included in our framework. And I should say from the previous development finance bond issuance that a lot of loans and a lot of social welfare payments were made to women for women entrepreneurs and for women who are in our special list of Ayolar Daftara, which means the women's diary. So there are a special list of vulnerable women identified, and of course the issuance of our previous 2020 development finance bond, where from the proceeds they were given some loans for them and other social support. So yes, in general, gender equality is included in our framework, and we pay, of course, special attention for the allocation of the proceeds of the SDG bonds to gender issues and some of the projects that are connected with gender equality, SDG 5. Thank you.
Thank you very much. I'm going to turn now to Mr. Arima for my last question, but also checking in with our dear audience. If you have questions for the panelists, please put them down in the chat, or and we can then pick them up. I have quite a few, but you get priority, so please do note your questions for any of the three panelists or all of them, and indicate who the question is for. Turning to you now, from the World Bank perspective, how do you ensure, for example, that the SDG label projects meet the market criteria? What's your screening process? And can you give us some successful examples of implementation of SDG projects in the region? We'll be taking up, the next panel, in fact, will be taking up impact. But if you can give us some example of, of impact, just a taster, from the use of proceeds. So screening criteria, how do you ensure that it meets the market standards and criteria? And then, a taste of what impact looks like from the use of proceeds.
Thank you. Can you hear me?
Perfectly.
Okay, great. So as I mentioned, our financial structure is just like commercial banks. So it's to be honest, it's fundamentally very difficult for banks to how can I say, strictly manage the use of proceeds. So, for example, electric utility companies sometimes they sell the renewable energy electric with a slightly higher price. But I think you can imagine that those electric is not exactly produced by, for example, the water power plants or the wind power plants. The once electric is generated, we cannot distinguish those from other things. So same with the commercial banks. It's theoretically impossible to distinguish money from others. So what we do is to monitor the cash flow of bonds and the disbursement of loans manually. So that what we call the ring fencing, and it's on the ICMA's guideline too. But now we first introduced this idea with the green bond principle that originally drafted by World Bank. But now we are thinking beyond green is important. So we take a more holistic view that all of our entire balance sheet is social. So then, so we stopped really monitoring individual cash flow by individual themes and topics. So in turn, we strictly monitor the outstanding balance of each the theme loans, and also in the impact report, we introduced the SDG mapping chart in an impact report recently to make investors easy to view how we use the money we borrow from investors. So, and but again, the impact reporting technology, developing it is the most key part for enabling investors to monitor the impact of the bonds they invest in. So that's our currently most important topic to handle through the impact reporting. So did I answer your question? Any additional points you want to?
I'll come back to you on that. Thank you. Thank you very much, Mr. Riemann. So, Mr. Raghavan, this is a question actually to you and also to Ms. Nikmatova, which is a question that we also often get. How much of the proceeds, for both the Indonesia bond and SDG bond and also Uzbek SDG bond were used for refinancing? I mean, this is a typical thing for bonds. It's not always about new finance, and there's always a component of refinancing. But tell our audience, how much of it is really to refinance existing projects, and how do you grow, the portfolio of projects to also take into account new areas and new projects?
Okay, thank you for the question. If you look at our frameworks, it's clearly stated there that the proceed will be used for the social project, will be used as the underlying for SDG bonds, and the green project will be used for the underlying for the green sukuk projects. So the composition between the financing and refinancing is depend on the availability of projects. So based on the frameworks, it's possible for us to use the proceed for refinancing or to financing new projects. And if you look at the existing project that we plan to be used as underlying for the last year SDG bonds is mainly to finance the new projects. Even though some of this project will be to refinancing, but as you know, since the COVID, the government spent a lot of fund money to support the most vulnerable society, including for the health, for the education, and also for the welfare. So I think the most of the proceed that we get from issuing SDG bond last year will be used to the project that related with the pandemic project-related issues.
Okay, thank you. And I think there's a follow-up actually for you, which is in terms of the use of proceeds, was it used to finance the government budget or projects? So if you can talk a little bit about that.
Yeah, so the issuance of thematic bonds, both sukuk, the green one, and also SDG bonds, is only used to finance government projects. So we have to, I think we have initiated the project with UNDP before issuing the green and SD project, which called this the budget tagging program. So our budget was tagged with several key themes, including green and also social. That budget tagging is used for us to select eligible projects to be used as underlying for the green sukuk and also for the SDG bond. So the first thing first that we need to ensure that the projects already included in our budgets, and then we will tag these projects as eligible for SDG or green projects. So overall, the proceed for green sukuk and also for SDG bonds only used to finance government projects. Thank you.
Thank you very much. Over to you, Ms. Nigmatova, for Uzbekistan's experience. So how much of it was used to refinance existing projects, and how much did you see in terms of
seberapa jauh Anda?
Yes, thank you. So at first, I would like to set out that our framework, it is stipulated in our framework that we can actually use the proceeds for both financing of eligible projects. And even though the final allocation has not been approved yet, but I should say that the majority of the projects are new projects. We intend to allocate to new projects for better seeing the impact development aspects, the contributions, right, towards our SDGs and the real impact for the population. And for refinancing, I should state here that some of the proceeds could be directed to investment projects, so government investment project. There are some projects which are ongoing for several years, like maybe construction of healthcare institutions or others. And the initial use of these proceeds are for covering the budget deficits, and in parallel with the SDG bonds. So we use these proceeds according to the budget deficits of the past 3 years, and of course of course, considering their SDG impact. So to wrap up things, I should say that the majority of the projects will be new projects like construction of schools, healthcare, institutions, and other areas. Yeah.
Thank you very much. One question actually for Mr. Radwan. We noticed that over time, in fact, Indonesia realized quite a bit of a price premium, and in fact, you issued one of the longest tenor green sukuks a few years ago. What was it, 30 or 50 years? At a very competitive price. Do you expect to see a similar kind of price advantage or premium with the SDG bonds? Because that's another thing that's often on the minds of many people. Is there a benefit from doing the right thing aside from diversifying your investor base?
Okay, thank you. That's a good question. If we look at our first SDG bonds last year, we successfully priced the book around 12 years SDG bonds on 30 September 2021 with the size 500 million euro. The issuance was the important step forward Republic's commitment to achieve SDG and a major advance for sustainable finance. This issuance marked a historic milestone for Indonesia for being the first SDG Eurobonds issued by Asian sovereigns. And on the back of the strong demand from ESG focused account, the Republic's able to price flat to its outstanding curve with zero new issue concessions and inside a potential conventional issuance. The offering also marks the tightest pricing on the spread basis achieved by Republic in the 12 years tenor for the euro-denominated issuance. So I think we've seen the benefit of issuing the SDG bonds. And also, I would like to mention that in early 2022, we got 2 awards for Indonesia SDG bonds from the Asset AAA Country Award as Best Bond Sustainable Finance 2021 and Best SDG Bond for Global Capital Asia. So overall, the result is very encouraging. That's why we are planned to be the frequent issuer of SDG bonds, not only the green sukuk. Back to you.
Thank you very much. And now we've actually come to the end of our time for this panel. Before we turn over back to the moderator to take us into the next panel. But I am very pleased that we ended on such a positive note, and we look forward to seeing more bond issuances both from Uzbekistan and Indonesia, the Republic of Indonesia, and to seeing the development of this market, with spin-offs for other countries as well. Thank you so much for being pioneers and being an excellent panel. Thank you very much. Over to you.
What an amazing session, everyone. Thank you so much. Ladies and gentlemen, thematic bonds really do offer an investment opportunity for emerging markets issuers and investors to positively generate much needed impact in countries that need it the most to together rebuild out of the current pandemic in a more sustainable and resilient way. Once again, thank you so much to our speakers and moderator for sharing your practical insights and great experiences in developing and issuing thematic bonds. And for our second panel discussion, we'll be digging deeper into how we can ensure sustainable impacts and maximizing the leverage of the thematic bonds for SDGs and COVID-19 recovery. Let us all welcome the market experts for this subject, the Impact Measurement and Management Lead from UNDP Sustainable Finance Hub, Ms. Belisa Rojas, and the Manager of Sustainable Corporate Solutions of Asia Pacific from Sustainalytics, Ms. Cheryl Tai. and the Sustainable Bond Analyst of Debt Capital Markets of Asia Pacific from HSBC, Mr. Martin Prize. The second panel discussion will be led by Mr. Berli Martawardaya as the Technical Advisor for SDG Bond Impact from UNDP. Pak Berli, the floor is yours.
Yes, we are continuing the second panel that's have very strong relation with us. We want to make sure that the thematic bond are not just labeling or some washing, but actually have a clear and measurable and verifiable impact. So that's why the question of impact assurance, impact methodology, and as well as the transparency are imperative. That's what the market want to know. When they decide whether to purchase, whether to participate in the thematic band that being issued. So thank you. So we have a very distinguished panel with very relevant expertise. Maybe I'll start the discussion with question to each of you. In your experience, in your understanding of the market, from the issuer and from the buyer side, why the issue of transparency and disclosure are so important, and how it is being fulfilled? Is it maybe some best practice that the other country are still considering to issue their own can look up to? Can we start with Ms. Rojas?
Thank you. Hello, everyone. First, I would like to thanks for the invitation and the honor to be here today. Well, regarding your question, we can see that the thematic bond market is just growing, and that this trend is just going to continue, right? And this makes sense because it's been perceived as an attractive mechanism for financing sustainable development. However, issues such as the fear of impact washing can really put in risk how fast this market grows. So if we want to see it growing and ensuring a diversified competitive market, we must convince both issuers and investors of its effectiveness, right? How effective are thematic bonds in delivering impact? And for that, transparency and disclosure is key, because transparency and disclosure are going to allow issuers to really report and demonstrate that they are having the impact they promise, right? Something that we're seeing, and in terms of response, there is emergence of different standards. Today we had a great presentation about the ICMAT standards, which are voluntary standards, and they have been critical in this market to really ensure avoiding impact washing, greenwashing, social washing. But these are voluntarily, and there are others too. And something that we see emerging is a lot of efforts, and including us at the Sustainable Financial Hub at UNDP. What we're trying to do is to complement and not only focuses on the bond program per se, but also on the bond issuer strategy in terms of sustainability. So there is a lot of efforts, and sometimes that creates confusion, but the good news is that we're working on it, many actors, to really ensure that there's no greenwashing, no impact washing, and really we can rely more and more on these amazing instruments, right, to really achieve sustainable development and the SDG. Back to you. Thank you.
Thank you, Ms. Rojas. I'm going to Ms. Cheryl Tate. You have, and your company Sustainability has been reviewer or second party opinion or for many of the sustainable bonds. So what can you tell us about the sustainability, about the transparency and impact reporting that has been done in the already and upcoming SDG bond?
Oh, thank you for having me. Good morning. So there's been a lot of research and report put out recently. There's one that I would like to quote. Environmental Finance. They did a report on green bond funds impact reporting practices, which is an annual survey of major investors in the green bonds and the green bond fund managers. And it was a very resounding consensus that impact reports are crucial. And this was like 9 out of 10 investors say that impact reports are very crucial. But 75% of these investors have also cited that a lot of the current impact reporting practices were inadequate, and more than half of them said that often it's poor data or lack of impact reporting that is deterring them from making even further investments. So there is a lot of areas that need improvement around transparency and the standardization of reporting, because a lot of these funds tend to rely heavily on bond issuers or using their own impact reports, which often vary in terms of the metrics that they use. Are they using absolute metrics or relative metrics, as well as how they calculate their baselines and their methodologies, or the way the format the data is presented. So having a lot of these frameworks, like what the previous speaker Belissa mentioned, it really helps with this standardization. If everybody is referencing common frameworks to report on their metrics, so like at Sustainalytics, we reference the ICMA, the ICMA ones as well, like the impact reporting handbook, as well as the social equivalent. We also reference frameworks such as the PCAF, so that's the Partnership for Carbon Accounting Financials, on avoided emissions for project finance, as well as the GHG protocol for project accounting. So by referencing a lot of these frameworks, when we calculate impact, it helps with this standardization and to ensure that people are reporting higher quality and a higher standard.
Okay, thank you. We go to Mr. Price. In your experience, and what do you see the developing country often has problem, or let's say more challenges when collecting data. Some are less available than others. So what is your experience and your advice to those developing country in getting their SDG bond to be credible and having the information that needed by the investor and buyers?
Hi, Verdi, and good morning, everyone, and thanks for the organization of such a great panel. That's indeed a key topic which will help us to have an idea of the direction of travel of the future of thematic bonds. So we need for every issuers on the market, be they in developing countries or in emerging markets, transparency and disclosure is a cornerstone to any type of thematic bond issuance, because it will provide and build confidence between an issuer and the market, which is obviously key. It will also provide evidence on the real impact, as mentioned by Belissa, of such issuance on the climate and the society when it comes to reporting. So now from an advisor perspective, and what we see here in Asia and most of the time for emerging markets, our goal is to help our issuers in emerging markets to embarking into this thematic bond journey, which will lead them to set the required team and people in order to work on this journey and to work on transparency and disclosure of this ESG data. And we expect that it will then enable them to disclose allocation and impact reports as required by the ICMA and as explained earlier by Mr. Mushtaq Kapasi. So usually people and issuers in emerging markets here in Asia will take leverage on the thematic bond issuance to build or improve their current ESG structure, ESG team organization, and the way they treat ESG. So they will leverage on this issuance and take benefits of this to work on that front. So thematic bonds disclosure demands for emerging markets a real time and a lot of resources, that's for sure, maybe more than in any other part of the world. But it is a vital tool for issuers to be transparent with the market about how it is tackling risks and opportunities associated with the issues. And it is a task that issuers here also in Asia Pacific cannot afford to get wrong.
Thank you, Mr. Pras. I'm going back to Ms. Rojas. We understand, that there's a problem, or at least, there are emerging and evolving standards. So that's one we have faced. That we cannot force the market or the issuer to be compliant used to a single standard since beginning. And understand that UNDP has been developing impact standard or reporting standard. So could you share some of the process of developing those standards, and how soon do you think there will be a standard 2.0? So all those the challenges, because they are new instrument, they are new condition. How long that the current standard will last until it needs update on the 2.0 version? Over to you.
Thank you, and thank you for the question. And you make me smile because we put a lot of effort in finishing the version 1.0. So what we're hoping is to now that the standards are developed, we're getting to do a pilot in assurance this year on those standards. These are standards for bond issuers, as you mentioned, but also for private equity, VC funds, and enterprises. So this year, we're going to focus on piloting an assurance framework. And based on that and the experiences of the pilot, probably having recommendations to improve for a next version. So that's in terms of next version. And maybe what I wanted to share with you is that many times when we talk about bonds, we go very quickly, what's the metric, right? What's the indicator? And what these standards do is that they really focus more on practice. We call them practice standards because the goal is really to focus on how decisions are made, right? So it's not going to have a list of what to fund, for example, to be called a green bond or a social bond. What they're going to focus on is how is the strategic process in terms of deciding where to allocate the funds of the bond. And the idea of the standards is to really allocate capital where it can be most impactful. In other words, not all the SDGs are the same, and not the impact goals are the same. So what we're really focusing on is on encouraging bond issuers, as well as investors and even enterprises, to really allocate capital where it can be most impactful and have that internal decision-making process and discussion first at the strategic level. So that's one very important element. Then when we go to the program per se, there are a lot of standards focusing on the program and the use of proceeds that we have seen, how to report, how to monitor, and everything. But what we are focusing on very explicitly is also the bond issuer sustainability strategy. So the way we see it, and that was discussed in a previous panel, right? There was a question from the audience, very interesting. If, for example, an oil company can have a sustainable bond or a green bond. And what we learn is that the market more and more is asking for assurance that the issuer is committed to sustainability, not only the bond program. So that's something that the standards cover explicitly, right? So this is just to give you a couple of examples. So to sum up, this is really about, the standards are about decision making, how we make decisions to do two things: allocate capital where most impactful, but also once the capital is allocated, what information, what data do we need to take corrective action as needed if things are not going as expected, right? So of course, as you can imagine, if you set up a system like that, then if you have data to make decisions in an active way, then reporting is just a subset of this because the data is going to be available. So really, we feel that these standards are filling, a small gap in the market, but an important one. So I invite you all to look at our version 1.0 and stay tuned for the next one. Thank you, and back to you.
Me, myself, and my team has been following your reporting tech standard closely and find it very helpful and comprehensive. But yet, we might have some feedback for you for the info, because something in Indonesia still have some specificity that hopefully can be used in the second.
I would love that.
Second
Thank you.
version.
That's very helpful. Thank you very much.
Now, we see from the issuer side, there are already effort to standardize, the effort to make it more transparent. But it's a market, or it's a buyer's market. So we want to know, Ms. Sharon, please more insight. What do they want? What do the investor wants? Because I've been talking with some of the issuers from the government side, and they've been saying that the green investors are much more picky, much more asking for information than all other type of investor. So why do they demand so much info, disclosure, and continuous updating? Compared to to other type of bond and financial instrument.
Thank you for that question. So I think that one of the main reasons is that there is no doubt there is a lot of regulatory pressure that's coming, and it's most acutely felt in Europe, probably because of the various measures such as the EU Action Plan on financing sustainable growth, and also the US has also seemed to be heading in a very similar direction with the creation of the Climate and ESG Task Force by the SEC. So because of this regulatory pressure that is on these investors to report on the fund's portfolio alignments, be it to the SDGs or the 2-degree Paris Agreement targets, that's why they are definitely demanding for greater variety of metrics, greater frequency of reporting, a greater consistency in your reporting. So there was also, I think I saw this statistic that there was an increase from 63% in 2020 to 73% of funds in 2021 that were reporting their alignment to the SDGs. So because these investors are reporting on it, they need to get this data from their issuers. So I think I would also really quite like some of these interviews that I've heard from investors about how do they ensure that the impact is actually delivered. So there are a few ways that these investors do it. The first way is that they will have to verify that the issuers that they are investing in, or they put in their investable universe, how confident about are these environmental and social impacts, and how they do that sometimes is they rely on second party opinions from verifiers like us, as well as the second part is also to do this impact measurement and reporting which is a very good important annual check to make sure that the issuer is actually delivering the impact which they had expected. And this allows these investors to aggregate this and report for their own reporting. So I think, short answer, there's a few ways, that investors are expecting it. You can get a second party opinion. You can report on a greater variety of metrics. You can also report, on whether, your financing is going to align to the 2-degree Paris Agreement targets. Investors have also mentioned, they would like to see shorter bond impact reports, more comparable metrics, more standardized calculation. And this really is the main reason that I think personally is coming from the regulatory pressure.
Okay, follow-up question. So what is the tools that you use? I mean, the sustainability use, or tools of set of tools. Could be not only one that you use or utilize to strengthen credibility and standardization. Do you suggest advice to company or country that asking for your advice? Use this tool. Use the UNDP SDG impact report, or what are the tools that you suggest? So we got even more specific insight for the audience.
Sure. Happy to take that. So Sustainalytics, we have recently developed and launched our Green Bond Impact Report, and we're just starting work on developing the social equivalent. So this will be very timely because now with green and social, we can capture the reporting for SDG bonds. So social metrics tend to be a little bit more challenging because social tends to be a bit more bespoke. It's mainly on reporting count. So, metrics could range from the number of SME loans to, number of women-owned businesses to something like the number of hospital beds or even vaccine access. So, some of the references we can use for, social include the ICMA handbook on working towards harmonized framework for impact reporting for social bonds. We also perhaps reference some indexes such as the Human Development Index or the Life Expectancy or the Life Satisfaction Index. We also utilize, or we're looking at the GIIN, which is the Global Impact investing network. They have a compass reporting structure. But for the green bond impact report, the main ones that we use is also like the ICMA handbook one. We use the GHG protocol, which I mentioned, for project accounting, as well as the PCAF, which is the Partnership for Carbon Accounting Financials. We strive to report as transparently as possible. So we refer very often a lot to public databases, to governmental databases on GHG accounting when we are doing a lot of these modeling for the impact. We will try where possible to reference government and publicly available data. But there's a lot of market references out there, like the UNDP, that SDG impact standards, and as well as I think at the start, one of the speakers mentioned the OECD and UNDP. They have impact standards for financing sustainable development, which built on the IFC operating principles for impact management project, UNEP principles for positive impact finance, and the principles of responsible investment. So there's a lot of references out there. So I agree with Melissa that there's so much references out there, but I think a lot of them just built on one of each other. They're not reinventing the wheel. And maybe just a little plug, Sustainalytics, we're hosting an upcoming webinar in July, specifically on our impact reporting solutions, and we would love to extend the invite to all to come along, and we will share with you a little bit more about how we crunch impact.
Thank you for sharing some of the secret sauce in the kitchen of Sustainalytics. It certainly helped us a lot, and looking forward for the event. So I think hopefully will be one of the catalysts toward a single standard or in reporting. I will go to you, Mr. Price. What do you see? What are the strategy and process to ensure that is actually being used, the money allocated are actually used for the targeted project, that it is actually for the SDG project, not just I don't know, whitewashing or greenwashing, or how do you make sure? Do you have some kind of audit or verification process beside the report that being issued by the institution?
Yes, indeed, Vali. That's a quick question, and there are a number of things to take into consideration here. One key point to note about just first of all ESG data is how much that has improved over the last 5 to 10 years. And without these improvements, instruments like SLBs, but other GSS bonds as well, would have been impossible. So one of the most important strategy when going on the thematic bond routes is to provide as much granularity as possible, because this granularity will then help investors answering to their own stakeholders. So now, as a bank, as an advisor, to us, the success of a thematic bonds issuance starts with the establishment of a strong framework, obviously. And so, to take the example that was provided earlier, the ICMS Green Bond Principle, for instance, mentioned that reporting is required up to the point when the proceeds are fully allocated. For example, if proceeds are for 100% refinancing, then reporting is only required once. However, we have observed that and investors want to have a report until bond maturity. So if there are obviously no material changes after the first reporting, the issuer can simply confirm that use of proceeds allocation remain unchanged, but issuers are also expected by the market and by advisors to also provide the cumulative impact of these projects year after year. So another expectation from the market is for issuer to commit to provide this limited assurance reports on allocation and impact reporting, as it will give further confidence that the proceeds have been used in line with what is stated in the framework. So now it's only a limited assurance report. We have seen some voices from the market expecting that now it's not only about just a limited assurance report, but a full audit exercise on the figures provided by the company, and that some people expect that some people go on the field in order to track whether these figures are real or not. And so that's an improvement that we may see on the market in the next few years. Then internally, in terms of the corporation, of the issuers, company also strive to settle a wide range of internal tracking methods and systems in order to track that the use of proceeds have been kept track into a register. And so that's typically another way to ensure that the investment on thematic bonds are used for the intended purposes. Now, on our side, on the bank side, we also obviously help these issuers to set this target, and we also have internal requirements to see whether certain issuers respect our internal thresholds, which also takes example of several international standards. And so we ask a lot of questions before accepting a mandate to clients to see whether they are aligned with our internal policies.
Yeah, to go into the financial side, yeah, there is a standard, yeah, international financial reporting standard. Then each company publish its report. Then it is being audited, yeah, to verify that the report is yeah, in accordance to the standard. So do you think there some kind of public accountant, yeah, so SDG accountant or green accountant that should be a body to verify that?
Yeah, that's definitely a possibility. For now, that's not expected on the market, and obviously the issuer should not be the only one to be accountable for this process. They need to rely on external parties, external reviewers such as Sustainalytics, organization like the UNDP to help on this process. And usually it is required from the issuer so to issue an allocation report with an external review within 1 year after the label bond is issued, and investor will typically expect to find this report on the company's website, right? So it is important to stress that for now, most of these investors do track they do the tracking manually. So if they want to check where the use of proceeds have been allocated to, they need to find these reports usually on the company's website. And sometimes within these reports, impact indicators can be contradictory. So investors have to make their own choice with regards to what comes on top, what to prioritize. And this is the reason why standardization in the way of disclosing such data will become key, and that this specific accountant checking that the ESG data behind that are efficient and correct will be required. So indeed, that's not only about just the issuer providing a report, it's about gathering all the stakeholders around that to make sure that these data are correct and accurate. And obviously this will improve with time. And for the first time recently, we have seen organizations such as the International Accounting Standard Board, the TCFD, and among others, working together in order to unify how issuers should report on ESG and sustainability, which will definitely impact the way it is also reported for thematic bonds. So it should be, let's say, from this perspective, easier for issuers to report with standardized figures because they will have to structure the data the same way.
Yeah, I invite the audience, yeah, to post question or comment, yeah, to the Q&A. Yeah, so we still have about 20 minutes, and yeah, it's always not to extract the most knowledge and experience from our three distinguished panelists. Okay, while waiting for there are already several questions in the Q&A, but while waiting, let me give a common question to the all panelists. What are the practical challenges, yeah, in ensuring the transparency and disclosure, especially for the, let's say, second round of issuance? Yeah, because we understand that the first round, this must be some learning process and curve. Yeah, how to make the second and third round of issue of SDG or green bond are better or more impact than before. Yeah, so let me mix a bit. Yeah, from Ms. Cheryl Klein.
So I think from what I've seen, I think a lot of the main challenges that a lot of investors, face comes to, aggregating a lot of these bond impact data is first is like the low transparency. So a lot of issuers, maybe they lack the data, or they don't have it, or they're not sharing it publicly because it may be a bit sensitive data. So because of the lack of accurate data, it actually makes the crunching of the impact less accurate as well, because you need to make a lot of assumptions. There's also, like what we previously mentioned, there's very little standardization because maybe issuers are reporting using different methodologies, or they are using different baselines, and it makes it difficult because then they have to normalize a lot of the data before you can aggregate it. It's also, I think, the concept of additionality. So we did touch on the first panel discussion about financing versus refinancing. So this impact additionality is quite a big debate, because there's a lot of green bonds, that are for refinancing rather than new projects. So when you are trying to judge what is the actual additionality of the environmental impact, it's quite difficult, because a lot of these projects have already been established previously. And the last thing I think is also, like, a lot of projects, they are not just financed just by bonds, and maybe the person who owns that wind farm, they're not the sole owner of that project. So often there's also a bit of calculation. You need to pro rata for your stake, which also impacts a bit of that data aggregation. So a bit of a long answer, but there are quite a few challenges when it comes to aggregating impact data.
Yeah, I feel you. Yeah, I mean, because we are doing the calculation ourselves, and it's not easy. Yeah, so we'll try to make it easier for the agency like you to believe our calculation later. Okay, Mr. Has, what's the practical challenges? In your experience. Yeah, so we have audience from many countries. So, what are the nots, do's and don'ts for the country or company institution that want to issue their SDG or green bonds?
Thank you. I just want to start by saying that I agree with everything that Cheryl mentioned. So I will try to not repeat and try to add, although you made it difficult for me, Cheryl. It was a great answer. So I guess one of the challenges, maybe more at the system level, is that it's voluntary right now to adhere to any standards. So that is not super helpful in the system level. The other one that we're seeing in developing countries especially is the lack of capacity, right? The resources it takes to really have a robust impact measurement and management system, right? Which is what you need to various things, right? Even to defining what to invest that's most impactful. That implies prioritization of different impacts, right? Maybe impact ratings, or comparing, what's the problem we want to solve. And that is the first step, but then you have to choose the indicators, set targets, maybe against thresholds, and monitor, right? So all of that is really a lot of work, and it's not easy. So sometimes I wonder myself, even if, impact washing that has this connotation, maybe being intentional, misleading, but sometimes are real challenges. Even if you want to do good, it's just difficult, as you said yourself, that you're having challenges aggregating data and putting together, the impact information. Something really important, and it's costly, right? And another challenge is the continue reporting regularly, right? Because it's not easy, it's not standardized, it creates a lot of effort. So maybe that regularity that then creates, basis for improvement and comparison. Maybe sometimes we won't have the discipline, given that it's not easy. And then another, I think, challenge that I think it's a challenge that not only focuses on positive impacts, but the whole impact of project, right? That's not obvious, right? And sometimes we talk about ESG impact, SDG, sustainability as synonyms. And right, and it's very easy to show, okay, that impact that I promised, here it is, but did anything unexpected happen, right? And how are you measuring that? Do we have an idea of the net impact? So those are other challenges. And then finally, of course, we mentioned verification, assurance, and even evaluation, right? And the attribution to any impact that you can demonstrate. So I think those are like practical challenges. And then my hope to address them is that we really get together and explain how standards complement each other. We get better at metrics. We also are, I come initially from a development sector, and one of my motivations to work with the private sector is that I really wanted to share with you all what doesn't work. We try to monetize impacts for decades, right? We try to aggregate, and at the end of the day, and maybe that's my key message, and I close with this, is every piece of information gives you certain data, but not the whole picture. So it's really important to understand what is it that it's telling you, and what you know and what you don't know. And based on that, take decisions and assess the risk. I think maybe that's more important when we figure out how to really get to a better place with more data, benchmarks, and all that to understand, okay, this is what I have, but then what I might be missing, and then what are the risks and what I'm going to do about it, right? Which is what we call at SDG Impact, UNDP, decision making, embedding impact and considering all the risks. And I really like what also Mr. Prisa said about stakeholders engagement, which is really important too, right? It's not just our statistics about what we think the impact is, but really involving those experiencing the impacts is really critical. Back to you. Thank you.
Thank you, Mr. Khas. Yeah, Mr. Pris, what do you see as private sector? What you see? What other determining factor? You can say, oh, this SDG report or green report are not credible. You know, do you have any let's say quasi threshold, that you can say one report is adequate and the others are not?
Yes, indeed. That there are some report, and I will try to bring as much as possible after the two great answers that we just received from Belisa and Cheryl. But indeed, we have seen some reports that are inconsistent by what's expected on the market, and investors have also been complaining about that kind of reports. And the main question around that is what is missing, and it's clearly around granularity. So, for instance, issuers are going to issue green bonds, for instance, and they will say, oh, we have allocated 50% of the green bonds toward renewable energy project, 50% of the green bonds towards green buildings project. And the impact is around X greenhouse gas emission avoided. Today, in the current market, this is not enough from the market perspective. The market will expect far more granularity from the issuers into what needs to be implemented. So it's not just about providing the share between each categories, but provide, obviously subject to confidentiality disclosures, what's behind each project, and really dig into what's lying behind the use of proceeds of the specific bond, and not just about linking a project to SDG bonds or SDG impact. So we also see a lot of investors complaining of that the framework are typically too wide and obviously not granular enough. And so it lies to the question of key question. What are the key questions that an issuer should ask to itself before doing this impact reports? It's about what needs to be collected first, who needs to be involved in the process, and where the data are in the business, because that's also the quick question. A lot of our clients and issuers, they have everything here to go on the green bond journey, but they don't know where the data should be seeked, because you may have a lot of departments working on different things, different projects. So is there a structure that's enabled to gather all this data, and how to ensure the quality of this data? So we'll take a quick example here, but for instance, it is particularly complex for a lot of issuers in hard-to-abate sectors to account for the greenhouse gas emission scope 3, given that usually it comes from the issuer supply chain, which is in a sense more challenging to track, right? But so you have several institutions and organizations that have published guidance in that sense to help issuers tackling the greenhouse gas emissions, scope 3. So the greenhouse gas protocol has done so, and for financial institutions, the PCAF has also provided some guidelines to calculate that. But it is still at the building stage, and we expect some more guidance in the future. And scope 3 emission will definitely be key to win this climate fight. And another challenge that we see is more on the social front, because on the green front is more about science and the it's easier to report on figures because you have a greenhouse gas emission reduction, you have an amount of megawatt hour production in renewable energy capacity, etc. But in terms of social, we have a lot of issuers saying, oh, but how could we report on social? Is it enough to just provide the number of people that have benefited from this use of proceeds? What should be accounted for? So we have seen earlier the ICMA providing more insight to what needs to be done with social fund, but that's definitely another challenge about providing the right angle when it comes to social reporting.
Yeah, there's a question from the audience, yeah, from Bu Listiani Dewayanti. So yeah, so what happened, yeah, if after being financed, yeah, then getting issue and getting the issue and getting the money, the issuer then don't meet the stated or the promise key performance indicator. Yeah, it's not green enough. Yeah. Yeah. So what actually happened, or what should happen? Could they get any kind of punishment, or let's increase coupon rate? Yeah. Yeah. For instance, yeah, or what is possible? Yeah. Or should it be in the bond agreement that the punishment should be stated? Yeah. So what do you think? Yeah, maybe continue for Mr. Please. Yeah, because you touch upon it. Yeah.
Yes, right. That's indeed a fair question. There are two types of assets here: the use of proceeds one and the sustainability linked bonds ones, where you have on the later one you have that kind of penalty. For use of proceeds one, you don't have for now an organization or any requirements to specifically meet the use of proceeds. So there is not incentivized. But the key question here is, what does an issuer lose in case he is not able to allocate the proceeds toward the project that he supported into his framework? And the thing is, he will lose, first of all, the confidence from the market. And this is key to keep growing on the market. Even if later on you want to issue a conventional bonds, or you want to issue a loan, or be active on the equity side, etc., the key is confidence. So it's not about the investor will sue the issuer because they are not allocated the proceeds. That's something that we have not really seen for now. But however, in terms of confidence perspective, that's something that will deeply impact the issuers. And for the sustainability linked bond, you have obviously this step up mechanism, so this financial incentive. So in case the sustainability target is not met, the issuer will need to pay a financial incentive to it can be the investor in the form of a coupon step up or a premium payment at maturity, but it can also be for environmental benefits such as planting trees, for instance, or some other kind of social projects. So that's the first incentive that we have seen is from the sustainability linked bond angle. And so also on another point, and since we are talking about litigation here, the increased regulatory interest on litigation in relation to ESG disclosure and impact reports mean that legal and risk teams should be more and more involved in the disclosure process. So historically, sustainability and risk teams has been involved, investor relations teams were involved, but nowadays it requires a lot of legal review on all this work, and extra examination is becoming increasingly important because of the increasing level of scrutiny.
Thank you, Mr. Prince. So let me follow up to Ms. Cheryl Tai. Yeah, the question or the punishment on credibility and no repeat order, is dependent on detection. I mean, if it is being known, if the misbehave is being detected, if it is being known, what is currently what is using the detection probability? Using is high for that kind of misallocation or plan, of course. So using it is high or not. So for the issuer to use finance not in the promise category. Please.
Yes. Yeah, no, I would say yes, it is high because there's a lot of NGOs, there are a lot of investors who are actually quite active and vocal in tracking all the allocations and the impact that these issuers say. So there has been market examples. I think it's really dependent on the various markets, like let's say in the US, there may be if you may be sued for, or you may be brought to a securities commission for claims or for not reporting claims, like that you issued a linked bond, or you failed to disclose that you actually still have investments in, let's say, active coal mine where there's a lot of social projects with that. So I would say increasingly, yes, there is a lot of pressure. There is a lot of ongoing surveillance, which is good. This helps, the market to be robust, and it helps, when people are transparent in their disclosures.
Yeah. So okay, let me continue to Ms. Rojas. Yeah. So how much is the impact report standard right now dealing or can assure that the such misbehave or misallocation from the promise agreement didn't happen? How to increase the detection mechanism? Because as Michelle said that outside US, especially in not so strong county with not so strong legal system, it's likely to be higher than.
Yes, so that's an excellent point. And again, I mean, we're still in the world of voluntary adoption standard, and I think that's a challenge, right? But what we're trying to address is the fact that sorry, can you hear me?
Yes.
Okay, sorry. Yeah, so what we're trying to address is more about the practice, the decision-making process, rather than the indicators per se. As we have heard today, there is a lot of focus on reporting on impact results and finding indicators and have robust data. And I think Ms. Cheryl mentioned very clearly that many times that data has a lot of assumptions. Sometimes we aggregate data, then we have to disaggregate data, consider different stakeholders' perspectives, groups, and subgroups. So all of that, we feel that the market is doing a really good job target area. But what we are missing more is how you make decisions, again, to allocate capital, to define those metrics, to define those targets. How do you follow up if things are not going as expected? And not only in terms of the financial penalties, but more about assuming the bond issuer has the real commitment to deliver on impact. What are the processes in place, the internal management systems, to ensure that this bond program has really a high likelihood of being successful in delivering impact? So in that sense, the standards focus again on decision making and processes. And what we have to ensure that this is done in a good way is that we're developing this assurance framework. But when you think about this assurance framework, it's really about imagining, right, the assurance going into the bond issuer and looking at the program and seeing, why some decisions were made and how they were made. And then, of course, impact data and impact performance will result from that, but it's not all about impact data. So we're hoping that the assurance helps on that. But as I mentioned, as long as all of this is voluntarily, there's going to be challenges, right, in scaling and really helping the market grow with integrity, which is what we want. But we hope that, we help a little with our work, and hopefully the market takes on it. And I really like what Martin said, and I wrote it, the confidence of the market, right? So we want to help with that, maybe in a broader way, in the sense that the seal might give you that confidence, but I really like that the market itself has mechanisms to deal with this, as he mentioned, right, today, because it's really important. Back to you. Thank you.
Yeah, quick follow-up question to Ms. Rojas. Just come. The question. There's a doubt of SPO. Second party opinion. So that usually being asked to so-called assess the green bond before being issued. How to make sure that the green bond issuer are not looking for the easy SPO. That will give high mark and is comply and fulfilling all requirement, and especially on the gender. There are also direct question that what gender is also more or quite difficult to measure and to verify as well.
Excellent question, because this is the same question that we asked ourselves when we created the standards. And again, I go back to decision making. So what does that mean? It means that for us, for example, to say this bond issuer will have the seal of the SDG impact standards is about how many options do they consider when they were defining which projects to fund under the bond program, right? They have different options. They reassess the magnitude of the problem they're trying to solve, right? How they did that. And again, because you are really focusing on the why and the how, it goes beyond the metric and the indicator. So it's not going to be enough, oh, this program is going to, reduce greenhouse gas emissions in X amount. We will say, okay, fantastic, but how did you pick it, right? What other things did you consider? Why did you decide this and not that? So in that sense, they're very demanding because they really go kind of behind the scenes to all this analysis of trade-offs, right? And not to take, and in a way, if we do that, then it will be obvious if you just pick the low-hanging fruit, because what we are after is, again, being a little bit SDG agnostic, right? Given the context where you want to operate, what are the most relevant development challenges and where can your money have most impact? That's, for example, the first thing we're after. And in that sense, we hope that if you open it, and I suggest you go to the standards and you will think, oh my God, Elisa was serious, because we have so many practice indicators. You have seen it, I'm sure, Ricky. There's a lot of guidance on comparing, assessing, and with a lot of technicalities behind, but that go far beyond IMM in a traditional way, and they really go to the managerial level of decision making to go after the highest potential impact. So that's embedded in the standards, and I'm happy to take questions by email. Thank you.
Yeah, this session has highlighted that there are a lot of promises in the SDG bond or green bond, where the green project need to be financed, need a lot of money, but they are also reminded, I think, very productive and quite detailed, and there are some dots need to be crossed and some I need to be dot there. To make it a really viable, really trustable financial instrument, financial instrument that will bring not just one time much needed financing, but also as continuous and viable option of investment for the market. Okay, I think, thanks again for the very distinguished panelists, a lot of insight, and I believe the audience and will be very much get a lot of understanding from this session. Okay, get back to you, to the host. Thank you very much again.
For excellently pointing that out. And ladies and gentlemen, as we have almost come to the end of our webinar, please allow me to invite the Deputy Minister of Development Funding from the Ministry of National Development Planning of the Republic of his closing remarks. Well, ladies and gentlemen, since we have a bit of technical difficulties, I apologize for the inconvenience. And so again, recap regarding the previous session on how to drive sustainable economic recovery through thematic bonds. It really is possible, and it is a very, very good method. And to have that to work, we sure need to remember that to ensure and facilitate financing flows that generate, in addition to financial returns and all that, measurable impacts on social and environmental development sure is crucial and mandatory. And capital markets, just as our moderator and our speakers have pointed out, sure is a viable and important source of the resources, specifically through instruments such as the thematic bonds. And ladies and gentlemen, indeed extremely
happy that we've gained so much information from our speakers. Once again, we'll thank everyone, all of our speakers, for excellently pointing that out.
Morning, distinguished speakers and panelists. Mr. Norimasa Shimomura, Resident Representative from UNDP, and Mrs. Valerie Julians, UN Resident Coordinator. Ladies and gentlemen, first of all, I would like to congratulate Ministry of Finance and UNDP for delivering a successful and inspiring dialogue today on leveraging capital for inclusive growth and sustainable recovery through SDGs bonds. Many of the insights and experiences that we shared are indeed a source of energy and optimism to inspire and to encourage us to achieve the SDGs in 2030. I would like to comment great accomplishments in financing the SDGs, particularly through the catalytic use of thematic bonds, which have been shared by Indonesia, Uzbekistan, and the World Bank. The experiences showed that the impacts produced by these bonds very well reflect the leveraged finance of the SDGs. These accomplishments bring a profound sense of hope for us to undertake innovative ways in financing the SDGs. Ladies and gentlemen, the discourses on SDGs have been gaining more and more traction due to the global pandemic that swept the world. Countries quickly became concerned about shifting their strategies to focus on recovery. As with the rest of the global community, Indonesia was also forced to revisit its national priorities, putting the socio-economic recovery at the forefront of the agenda. The true virtue of SDGs became apparent, that is, it is a blueprint for us to move forward in an inclusive and sustainable manner. According to the Climate Bond Initiatives, the green, social, and sustainability bonds market has grown impressively in the last 5 years, with a record-breaking volume in 2021 surpassing USD 1 trillion. This significant number showed the increased interest from the investor in sustainable projects, which is also a promising trend to include wider participation of multiple stakeholders and market players to boost the benefits for nature, climate, and societies. Countries such as Indonesia and Uzbekistan have fully understood and leveraged this virtue. It is proof of the concept that sustainability is the key to post-pandemic recovery. Nevertheless, despite the promising potential, thematic bonds development would require additional efforts and capacity from the countries or institutions as issuers, in which the role and support from the international organization and development partners like UNDP and the World Bank are essential. Such roles are especially important in strengthening partnerships, improving knowledge exchange, as well as building capacity and the enabling environment to maximize SDGs investments. Finally, today we have also learned that transparency matters and that it is key. The emergence of thematic bonds highlighted the importance of strengthening credibility and standardization when disclosing the results or impact of the investment. And this is where frameworks and principles play a role in ensuring that the resources generated from the bonds will be used for the intended purpose to accelerate the achievement of SDGs and post-COVID-19 recovery. Ladies and gentlemen, to conclude, under this year's G20 Indonesia presidency, the Sustainable Finance Agenda is actively discussed. The G20 Forum aims to reinforce international collaboration to leverage innovative financing mechanisms such as blended finance and thematic bonds, in upscaling our collective efforts to recover from the current COVID-19 crisis and deliver the 2030 Agenda for Sustainable Development. Today's webinar is an excellent example of knowledge sharing between international financial actors on this agenda. I would like to thank UNRC and UNDP for the great support to Indonesia's government. I will also like to congratulate the Ministry of Finance for the thematic bonds issuance, educate success factors, and opportunities for SDGs labeling transactions. To move forward, we need to discuss about the risks, consequences, the impact, benefit, and potential which we will be able to achieve together. In these trying times, we will need encouragement more than ever. The success stories shared earlier should be the catalyst that triggers more and more stories from every corner of the world. Finally, on behalf of the government of Indonesia, our hands are extended to everyone who shares the same spirit of ensuring that no one is left behind in our journey to create a sustainable future. Thank you very much.
Thank you so much, Your Excellency, for the remarks. And distinguished guests, ladies and gentlemen, the pandemic has truly shown all of us that the global system is only as strong as its weakest link. And what we have experienced emphasizes the need for strengthening our multilateral cooperation, and partnership is critical to achieving a sustainable and resilient recovery. And after more than 2 grueling years into the COVID-19 pandemic, we are fortunately all on the right track and back to recovery. Ladies and gentlemen, the journey so far has indeed been challenging, but we have proven that it is possible. Thanks to the great collaborative efforts and action, an inclusive, sustainable future is not
Inclusive
just
growth and sustainable recovery through SDGs Bonds.
What is right and
many of the insights
dear speakers
are
and
indeed
moderators
a source of
for
energy.
guiding us through this great event. Ladies and gentlemen, we hope that many of the stories and experiences shared can lead us to more action for the world now and tomorrow. And ladies and gentlemen, with that, we wish you a great rest of the day, and we'll see you next time. Thank you.
Recordings